In this video, we're going to get an overview of how to read stocks. Specifically, we're going to explore the different sources of information for reading stocks. And then we're going to talk about the essential features or the essential metrics or the essential numbers, if you like, that are involved in reading any stock. Okay, so without further ado then, let's get on with it. So firstly, where exactly can you find and read information about stocks? Well, obviously there's loads of different websites on the internet, and over time you may well have your own preferences and preferred websites, but I'm going to walk you through the top 5, the biggest, most commonly used websites for people who work with stocks, be that for the purpose of analyzing investments or analyzing stocks, or staying up to date about what's happening with stocks that they've invested in, or just markets in general. So the first one is Yahoo Finance, which you can get to by heading to finance.yahoo.com. The second one's Reuters, which is just reuters.com. Then you've got Bloomberg, which is bloomberg.com, Morningstar, morningstar.com, and the Financial Times, which is ft.com. Again, by no means are these the only websites, but they are certainly the biggest and most popular or most common websites that investors, both professional investors and retail investors, tend to rely on for information about stocks that they've already invested in, or indeed stocks they're looking to invest in, or indeed, even more broadly about how the market is doing and what's happening in the world of financial markets. Okay, so these are your sort of sources for where you can get information. And in the context of information about stocks, they're pretty consistent across the board. So yes, some websites are going to give you a little more information than others. Some of them are going to charge you for information. Others are going to give you everything for free. And some others are going to give you some information for free and other information for a fee. Okay, but for the most part, they tend to be fairly consistent with the kind of information they give, despite looking so different and indeed arguably sort of overwhelming. So if we just start with sort of Yahoo Finance, firstly, let me just show you that they are in fact fairly consistent. So they're just showing the trending tickers over here. Obviously those are trending for whatever reason. I don't know. I'm just going to go with Tesla because, why not? And so, what I did over there, just in case you're not familiar, is I put in the ticker for Tesla. Now, I know that the ticker is TSLA. So every single company, publicly listed company, will have its own ticker. And the ticker is just another identifier for the firm. So rather than using the name, you have a ticker, right? So Tesla is TSLA, Apple is AAPL, Facebook is FB, Spotify is SPOT, I think. And so, you kind of get the idea. Every single company has its own ticker. And, if you don't know the ticker, you can, of course, just search for the company by the name as well. But as you get used to it, chances are you'll just go for the ticker because, it just works out and ends up being a little bit easier. Okay, so we are, of course, on Tesla. So here we are. And, this is what we see when we're in the sort of summary page for Tesla. And so at the moment, at the time of recording, US markets are closed. And you can see that over here, it's telling us that US markets are going to open in 3 hours and 9 minutes. UK markets are open. So actually, let me just open another tab and let me just open up a UK stock just so we can sort of compare it. Let's say we're going to go with Vodafone. And notice that over here, there's multiple Vodafones, right? But I'm interested in the one that's listed on the London Stock Exchange. So the one that's in the UK. And so we can see that this is the one because that's telling us it's LSE, which is the London Stock Exchange. And I think that L over there is also telling us that this is based or listed on the London Stock Exchange. Okay, so this is Vodafone, and that of course is listed in the UK. And so you can see that the chart is kind of moving, right? And of course, if I go for full screen, then we can get more stuff and more information. But, I'm just going to go back. For now, we're not really going to look at charts. The point is that we've got this UK company, and you can see that it's actively changing the price over here. And that's because the UK markets are open, whereas over here, nothing's really happening apart from this thing, which I'm going to touch on in just a sec. And that's ultimately because this is a company that's listed in the US, and at the time of recording, the US market is closed. Okay, so a quick sort of overview as to what we're looking at. So this thing over here is the stock price. Okay, so that's actually the price or the market price that the stock is currently trading at. And because the market is closed, this is actually the price that the stock closed at as of when the market closed yesterday at 4 p.m. EST. Okay, so Tesla closed at $673.58. What does this 673.58 mean? Well, that's literally the amount that you would pay on average to buy one share of Tesla. Okay, or to buy one stock of Tesla. Now, if you don't know what a stock is, it's just a share or a financial contract or a piece of paper that tells you that you own a teeny tiny fraction or a teeny tiny part of a company. So if you bought one share in Tesla, then that means that you own one part, or a minusculely small part, in fact, of Tesla. But, by owning that share, however minuscule the share ownership is, you do get entitled to certain rights and certain privileges. But, fundamentally what this thing is the stock price. So that's how much you'd need to pay on average to buy one share in Tesla. Okay, and it's positioned in the same place over here, right? So you can see Vodafone, that's just the price of Vodafone. Now, importantly, because this is a UK company, this is not actually £128. So 128.2 over here is not £128 and 20 pence. UK companies, for whatever reason, are listed in pence. So this is actually 128 pence, or approximately £1 and 28 pence. Don't ask me why that is the case. It's just sort of convention, or for whatever reason. But to the best of my knowledge, the UK is the only country that lists companies in pence. For the most part, everywhere else, it's listed on the primary dollar value, or the primary currency, right? So in the US, it's in dollars, so that's $673. In India, it'll be rupees. So if that said 673, in rupees, then that would be 673 rupees. Okay, so again, just a quick note, UK stocks are listed in pence, not pounds, and everywhere else it's typically the main predominant currency, so dollars, rupees, yen, and so on and so forth. Okay, so this is the stock price. And what you're seeing over here, this plus 110.58, that's telling you the change in dollar terms, right? So we can see from this that the stock price of Tesla increased by $110.58 in a single day. So this is actually based on the previous close, right? So if I just go back, there we are. Okay, so the previous close, we're currently on Wednesday, that's Tuesday over there, Monday. Okay, so if we go to Monday's close, roughly about there. Roughly about here. So $568 roughly, right? Call it that. I mean, if I just move a little bit more, it's going to take me to Tuesday. Oh, okay. I can go one more. No. Sorry, I'm just trying to get to 4 p.m. Okay, so 3:45 p.m. we can see it's $562.97. Now, the market actually closed at 4 o'clock, not 3:45. But, I can't really get to 4 o'clock for whatever reason. Thanks, Yahoo Finance. But, the closing price as of Monday, 8th of March, was roughly about $568, and the closing price as of Tuesday, 9th of March, was roughly about $673.58. So, that's approximately $110.58, right? Again, minor changes here and there because, again, I can't really get to the price as of the exact close. But this is basically close-to-close change in the price of Tesla, of one share of Tesla. If we compare that to the UK one, because the markets are currently operating, this is actually giving you a live sort of change, right? So how much it's changed from the previous close. And so we can actually just verify this. So the previous close we can see is 127.68. So if I go 128.02 divided by 127.68, okay, and then just subtract 1, and then just multiply that whole thing by 100, then you can see that that's 0.27, which is this 0.27%, right? So that's the percent change over there, and the actual difference, so 128.03 minus 127.68, you can see that that's 0.36, right? So this thing over here is just comparing it to the previous close. So that's how much the stock is increased, or indeed decreased if it did decrease by, compared to the previous close. And this is just telling you the same thing, but in percentage terms. Okay, same story over here, comparing it to the previous close in dollar terms and in percentage terms over here. Okay, so that's the stock price. And then this thing over here, this pre-market, that's the price of the share as of right now, okay, pre-market. What is pre-market? Basically, if you're really rich, or if you're a large financial institution with access to deep pockets, again, if you've got boatloads of money, then you can get access to what's called pre-market or after hours or before hours trading. Okay, so unfortunately, at least at the time of recording, this isn't something that's easily accessible to the average Joe or retail investors or the common person, if you like. So people who don't necessarily have deep pockets, for whatever reason, we can't really access financial markets outside of trading hours. And financial markets typically go from sort of 9 a.m. to 4 p.m. Some go from 8:30 to 3:30 or 4:30. Or 9 a.m. to 4:30. It kind of varies from country to country, but for the most part, they'll be open for between 6 and 8 hours each day, Monday to Friday, excluding bank holidays and public holidays, right? So on average, stock markets tend to be open for 250 days, roughly about 250 days per year. And so coming back to the point I was saying, if you're a common investor or, a retail investor, then for the most part, you can only really trade in stocks during trading hours. So at the moment, for instance, I can't trade in US markets because the markets are closed and I don't have access to pre-market trading. Okay, but in a nutshell, it's basically way fewer people or institutions trading at this point. And it's the same sort of concept, so they still are just buying and selling the shares. So that is, in fact, the share price of Tesla as of pre-market time. Now, if you're thinking, well, I'm a retail investor and it's totally unfair that I can't access the stock market outside of trading hours, fair enough. But, there's little you can do individually, just to be realistic. So what you can do instead is kind of use this to see where the stock is going to open, once markets do open. And so, we can kind of see that it's likely that when markets open, Tesla will likely be, trading in negative territory. Now, obviously, that's not guaranteed. Things could change in the next 2 hours, for instance. I don't know, Elon Musk could tweet something radical or something to get investors really excited, and then that can, change things entirely. So treat it as a sort of baseline signal. Please, for the love of God, do not end up making investment decisions purely based on what this is telling you. And, for the record, while I've got you here, don't even bother with day trading because for the most part, that doesn't work. But that's a whole other point anyway. Let's get back to what we were talking about, which of course is the stock price. So what we've covered so far is, this is the stock price, this is the change in the price, this is the change in price in percentage terms, this is the price in after hours or before hours, at the time it's pre-market, but after markets close, you'll see the same thing over here and it'll say after hours or post-market or, something of that sort. And it's just the stock price after hours. Okay, same kind of principle over here. It's the change in the price. In this case, it's actually comparing it to this 673.58. So you can see that, right? So 673.58 minus this 662.2, that's roughly about 11.38. Okay, and the percentage change over here again, it's just that compared to that. Okay, then what else have we got? So let's actually start with a summary over here. So previous close, that's just the price at which the stock closed at previously. Actually, this is a bit of a Sherlock moment for me because, previously I was trying to identify the previous close over here and I was playing around with this chart and struggling with it. Actually, I could have just compared it to this previous close thing over here. But, anyway, that's the previous close. That's the price at which Tesla closed. And actually, this is as of Monday, right? End of market Monday, because this is as of the 9th of March. And so the fact that we're seeing a previous close over here, that's going to be as of the 8th of March. So it can actually seem a little bit misleading to some. But so this is technically not the previous close. This is the previous close prior to this close. So it's the previous close 2 days ago. And this is the previous close as of yesterday. Put differently, previous close typically relates to the previous day's closing price. So typically when you look at a previous close, it's referring to yesterday's closing price. In this specific example, though, the previous close strictly relates to 2 days ago. So the price as of market close 2 days ago. but it relates to that only because the markets haven't opened as of the time of recording, right? So markets haven't opened yet, and that is why the previous close actually reflects a price relating to 2 days ago instead of just 1 day ago, right? So instead of as of yesterday. But as soon as markets open, of course, we're going to have the closing price as of yesterday, and that's what the previous close will actually refer to. Okay, but anyway, so that's the previous close, the close before this particular close. Open is what the stock opened at as of yesterday. If I compare it to a stock that's currently trading, so Vodafone, we've got open over here. That's the price at which the stock opened at today. Over here, open 608.18. That's what the stock opened at, once markets actually opened. Bid and ask, over here you're seeing 0. This is actually incorrect information. This is something you want to bear in mind, okay? Not all of the information that you see on these websites, and this is not exclusive just to Yahoo Finance, right? So across the board, free websites as well as paid websites, believe it or not all of the information that you see is in fact correct. So the bid and ask over here at 0, that's telling you that, you can buy shares in Tesla for $0, which of course is utter nonsense because, you can't. So this is actually incorrect. It's just, not updated for whatever reason. If we turn our attention over here, we can see that we've got the bid and ask price over here. What is bid? What is ask? To remember the two, one is to do with buying, one is to do with selling. The bid is to do with buying. Okay, so just remember B, bid, B, buy. So bid is to do with buying, ask is to do with selling. So bid refers to the price that the buyer is willing to buy at. So people are willing to buy, in this case, at 127 odd pence, so £1.27 odd pence. And sellers require a minimum of 127.76. Okay, so that's bid and ask. Day's range is just telling you the range of the stock price as of today. So looking at this, I can see that Vodafone traded as low as 126.24 pence and as high as 128.32 pence, right? So that's just telling me the range of the stock price. If we turn back to Tesla, again, that's just as of that day. So it went as low as $595.21 and it went as high as $678.09 as of yesterday. Okay, again, this information can seem a bit confusing, right? So particularly that previous close. So just as a sort of nudge, if the previous close is $563, but the range is 595 to 678, then obviously this thing over here, this previous close over here, can't relate to the same day over here because 563 is outside that range, right? So $563 is lower than 595.21, and the fact that this is the day's range, so it went as low as 595.21, means that this 563 cannot relate to this particular day, right? So it must relate to another day. And of course, we know that it relates to the previous day, so 2 days ago, thanks to my painful experience with this particular chart. Okay, then 52-week range is just telling you the range as of 52 weeks. So Tesla went as low as $70.10 over a 52-week time frame, and as high as $900.40 again over a 52-week time frame. And this is a sort of running total, right? So it's 52 weeks as of today. So going 52 weeks prior as of today. And at the time of recording, it is currently the 10th of March 2021. And so this is somewhere from the 10th of March 2020 going all the way up to and including the 10th of March 2021. Okay, plus or minus 1 or 2 days, again, because, the data can be a little bit inaccurate, but, that's the 52-week range. Then we've got volume, which is just the number of trades that took place. So that's just the total number of shares that exchanged hands. This is not the number of investors that made trades. It's just, the total number of trades that took place across all investors. Average volume, well, that's the average number of shares that trade. I believe this is on a daily basis. Okay, it would be helpful if they told us that this is, whether it's daily or monthly or weekly or what have you not. They haven't really told us, but if I was to take an educated guess, I would think that this is per day. So on average, roughly about 40 million shares exchange hands for Tesla. Same kind of story over here. We can see volume for Vodafone. Probably not the best comparison, but I don't know, if I was to look at I don't know, let's say Ford, just because it's a car company, and let's compare Tesla with another car company. So we've got 60 million trades over here, and Tesla was 65, and the average volume is 40 million for Tesla versus 79 million for Ford. So there's clearly more shares being traded for Ford vis-a-vis Tesla. Okay, let's stick with Tesla again. We've got market cap over here. Now, this is the market capitalization, and that's currently $646.538 billion. Now, a lot of people get confused with the market cap and mistakenly think that this refers to the market value of the company. Strictly speaking, that is not the case. The market cap does not reflect the value of the company as a whole. The market cap reflects the value of the equity of the company. Okay, so a company is made up of both debt as well as equity, and the market cap only relates to equity. So what this is telling us is that's the market value of Tesla's equity. Now, if Tesla doesn't have any debt, then the market value of equity is the same as the market value of the company. Okay, but that's only if Tesla doesn't have any debt. If Tesla does have debt, then the market value of the company is not equal to the market value of equity. And so it's important to know and be aware of that distinction. So market cap is not the market value of the company. It's the market capitalization, which is the market value of the equity of the company. And what this specific figure is telling us is that if you were to buy all of the shares of Tesla, you would need to pay $646.538 billion. Now, strictly, it's not really as simple as that, because say, for instance, I don't know, you for whatever reason, stupidly announced that you're looking to buy all of the shares of Tesla. So you're looking to buy Tesla as a whole, assuming people believed you, right? So say, for instance, people could verify that you do actually have all of that money and you can actually buy Tesla shares. Well, people are going to start buying shares of Tesla left, right, and center, and that's going to push the price up even further. And what that means is that that market cap over here is actually going to get much higher, meaning that you will not actually be able to buy all of the shares of Tesla for $646.538 billion. Okay, but, theoretically at least, if you were to buy all of the shares of Tesla, well, that's how much it would cost you. But, in a more sort of general and strictly correct sense, that's how much the market value of equity for Tesla is currently worth. Okay, so that's how much all of the shares in Tesla are currently worth as of, the market close as of yesterday. How do we get this figure? Well, we actually take the share price, the stock price, and we multiply it by the number of shares outstanding. Now, we don't actually have the number of shares outstanding over here, but some figures will actually give you that. So some providers will actually give you that. In fact, let's just have a look, because this is a good time to sort of compare other companies. And then if we search for Tesla, let's have a look. Shares outstanding is the figure that I'm after. Can't see it over here. Oh, shares outstanding. So you can see it over here, right? So shares outstanding in millions, 959.85. Let's actually calculate this so I can actually show you that. So we're going to take 959.85, and that's in millions. So I'm going to multiply that by a million. And so that's now in millions. So that's the number of shares outstanding for Tesla. And we're going to multiply that by the stock price of 673.58. And so that tells us that the market cap is roughly about $646.535 or $0.536 billion. Right now, notice that Reuters is telling us that the market cap is 540 billion, which is actually incorrect, and that's not me being incorrect over here, because we can kind of verify what we've got over here with Yahoo Finance. So that's 646.538 billion, right? That's much closer to the figure that we had. In fact, if I just show you that calculation again, so 646.53. Okay, so it's not exactly the same, but these are just tiny sort of rounding errors that have happened for a whole host of reasons. But for the most part, Yahoo Finance is much closer to our estimate for the market cap of Tesla vis-a-vis Reuters for whatever reason. But this goes back to the point I was making earlier on. You want to be careful with the information that you see on, not just the most popular websites, but any website when you're looking at financial information, financial data, for a whole host of reasons. Data that you see can and often actually is incorrect. So you just want to make sure that you question things that you see, and you do in fact, cross-check and verify the data on your own. Okay, let's crack on. So we've dealt with the market cap. The beta over here, this refers to the systematic risk or the market risk of the stock, or the stock's exposure to the market risk. Now, I could create a whole other video dedicated entirely to the beta, so I'm not actually going to go into more detail about what the beta is and how to measure it. But, in a nutshell, it's just the systematic risk or the market risk. And they're telling you that it's 5Y monthly. They've calculated the beta using 5 years of monthly data. Okay, so monthly data over the past 5 years. If you were to use that data, then according to Yahoo Finance, you're going to get 2.06. Based on my experience, you almost certainly will not get 2.06. Okay, so for whatever reason, the estimates for beta just end up being different or incorrect. I guess incorrect is probably not fair because, it's just that the tiniest bits of change in the variables, the tiniest bits of change in the sample size or the sample source can end up resulting in a different value for the beta. Okay, but again, this is what they are telling you the beta is, 2.06. If we compare that to, say, Reuters, if they'll give us a value for the beta, I don't actually see the beta over here. Let's take a look at Bloomberg. Search TSLA, so Tesla, US. And if it opens, can we see a beta? Can we see a beta? Whoops. Okay, ads, whatnot. 1 year average. Can't see a beta. Where are you? Beta. They used to have the beta easily accessible or easily available. That's another thing you want to bear in mind. They'll often change the thing, right? So they'll change the user interface or they'll change the display or the information. But for the most part, some things are going to be fairly consistent across the board. Okay, I can't seem to find a beta over here. Let's take a look. I know I can probably find the beta if I dig a little deeper, but I'm just trying to see if I can find it, just within the summary page as opposed to me digging way deeper and hunting for the information. Beta, okay, 2.05. So over here, Morningstar and Yahoo Finance seem to agree. 2.06 and 2.05, that's not a huge difference. It's still slightly different, as you can see, right? But it's not massively different. Let me just check the FT, search the FT, TSLA, Tesla. You're not going to give me the beta, are you? Beta 2.04. Okay, so 3 websites and 3 different values for the beta. Make of that what you will. But, it's fairly consistent anyway. It's not like one is telling us that the beta is, 20 and the other is telling us it's 0. So they're, fairly consistent, but I wouldn't treat that as, a rule of thumb. So sometimes you will find that they give you fairly different results. I haven't really seen insanely different results. So, of course, how do you define insanely different? So I haven't seen results where one website tells me the beta is 0 and the other tells me it's 20. But have I seen instances where one tells me the beta is 1.5 and the other tells me it's 2.5? Sure, I have seen those sorts of instances. And of course, that's not really reassuring. But again, this comes back to the point I made earlier on. You want to question things that you see. You want to cross-check the data that you see and don't just take the data as is. Okay, don't just trust the data as is. But okay, so that's the beta anyway, which again, remember, is the market risk or the systematic risk or the exposure of this particular stock to the market risk. You can see that Vodafone over here is 0.84, and all that means is Vodafone is far less risky as far as market risk goes vis-a-vis Tesla. Put differently, the market exposure or the exposure of Vodafone to the market is much lower vis-a-vis the exposure of Tesla to the market. Okay, and just for the heck of it, let me just compare the beta estimate from Morningstar for Vodafone. So VOD is the ticker, and of course it doesn't really show us suggestions. Vodafone Group, and now we need to find the right Vodafone. US securities, foreign securities. Yes, foreign for US, but not foreign for, anyway. So foreign over here is, of course, foreign to the US. Not the best choice of word, I would think. Vodafone. Okay, Vodafone LC. I don't know what CHIX is. I'm guessing these are exchanges or something. If only you would make it easy or easier for me to just find. Right, I'm going to move over to FT. What were we looking for? Vodafone, VOD. LSC. Okay, so that's a lot easier for me to get to where I want to go. Beta is 1 point. Okay, so this is what I was talking about, right? So a fairly vast difference in the beta estimate. 1.1315 according to the FT, 0.84 according to Yahoo Finance. Make of that what you will. Why is there this difference? Well, it's likely, almost certainly, because of the way they've measured or quantified or estimated the beta. Now, Yahoo Finance is telling us that they've estimated the beta using 5 years of monthly data. The FT hasn't really done that for us, right? So they've basically left us to guess how on earth they've estimated this beta. And that's problematic because they could have based this on daily data or monthly data, weekly data, annual data, and, you know, a 1 year time frame, 2 years, 3 years, 5 years, 10 years, 30 years. I could go on, right? So there's a few different variables at play here. The other thing is, which one did they use as the market portfolio, right? Did they use the FTSE 100? Did they use the FTSE All Share? Did they use, I don't know, some other stock exchange or stock market? And of course, Yahoo Finance estimate could have used a different market proxy. Now, I'm concerned that I'm getting a little bit too technical here, but, you know, the key message really is please don't take data as is. So don't just believe it just because, you know, oh, it's on Yahoo Finance or the FT or Morningstar, so it must be correct. No, data can be wrong, so you want to question the data and, you know, cross-check it. You can calculate this stuff on your own. So do your own calculations and, you know, validate that and see whether what you get is in fact consistent with, you know, what the others are displaying or what the others are claiming to be the estimate for any proxy, right? In this case, the beta. Okay, let's come back to Tesla. PE ratio over here. So the PE ratio is just one of the most popular investor ratios. It's the price to earnings ratio. It's literally this thing over here, the stock price divided by the earnings per share. Have they got the earnings per share? No. Oh, EPS trailing 12 months. So we can actually calculate this, right? Let me just get my calculator. If we take 673.58 and we divide that by the EPS of 0.64, then we get 1052.46875, which is approximately equal to 1052.47, right? So that's how we get it. It's just the price divided by the EPS. And EPS is just the earnings per share, so it's the total earnings or the net income or the net profit divided by the number of shares. Now, is that the definitive price to earnings ratio? Well, let's have a look. So according to Bloomberg, let's get the price to earnings ratio. Of course, it's not easily available. Whoops, EPS is here. Price to sales, price to earnings ratio, 911. Okay, so they've got 911, and where are we? Yahoo Finance is 1052.47. Let's have a look at Reuters, price to earnings, forward PE. I'll touch on that, you know, if I see it again. At the moment, I just want to stick to the price to earnings ratio, which of course isn't here because that would be too easy. Let's have a look at Morningstar. You're going to make life difficult as well, aren't you? What we're looking at, Tesla, let's click on Tesla, and of course there's some blah blah bits of information. I just want the price to earnings ratio, really. You've given me the price to sales, consensus forward PE. That always makes me laugh, but you know, that's for another time, another day. Right, can't find the price to earnings ratio. Key ratios, go on then. Price to earnings, nope. Although I would think a price to earnings is a pretty key ratio, but, you know, how you define key ratio is different, right? Let's have a look at FT. Price to earnings, there we go. Okay, great, 17.45. That wasn't weird at all. Oh, hang on, this is Vodafone. Sorry, wrong stock. Let's go back to Tesla. So, I mean, how did I realize that I was looking at the wrong stock? Let me just go back. This is a nice lesson to learn. So my eyes weren't actually focused on this thing, right? Even though I may well have seen it or scrolled, my eyes totally skipped this thing. And while I was looking at this, I genuinely thought I was looking at Tesla data, right? So data for Tesla. But the PE here of 17.45, when I saw that, I was like, oh yes, there's a massive difference. So it kind of proves my point. But then I thought, actually, that's insanely different to what we've seen, right? So it was 1052 according to Yahoo Finance. It's, where are we? forward PE. Hang on, who was the other one? Bloomberg had it, didn't they? Yeah, 911 according to Bloomberg. When I saw 17.45, I was like, well, something's clearly not right? So there's something wrong over here. I smell a rat. I smell a fish. I don't know. I smell something, right? Something fishy. Anyway, so wrong stock. We're looking at Tesla. So let's pop into Tesla. We want the PE ratio, 1083.24. Different, right? So 1052.47 according to Yahoo Finance, 911 according to Bloomberg, and where are we? 1083.24 according to the FT. And this is actually interesting because the FT is telling us that they're basing it on TTM, or trailing 12 months. So fascinating, isn't it? Because according to this, the FT is using precisely the same method as Yahoo Finance, because it's trailing 12 months. So they should be using the current stock price and the EPS that's based on the last 12 months net profit, right? So the net profit based on the last 12 months, or the most recent 12 months. And so Yahoo Finance claims to be using the trailing 12 months, or the last 12 months of earnings data. So does the FT. And yet, for whatever reason, some magical reason, they've ended up with a different estimate for the price to earnings ratio. Now, they have to use the same stock price because, that's the same thing. We can't really debate on that. We can debate on whether we should go for quarterly data or monthly data or daily data, but we can't debate on the stock price, right? 673.58. That is the same thing across the board, right? So if there's one thing they can all agree on, it's the closing stock price, right? So they can all agree on 673.58. Now, importantly, sometimes, that's not entirely true, because if the markets are open, then you may well find slight differences in the stock price data, right? But that's not a huge deal breaker. That's just because, some of them might be delayed by 15 minutes, others might be delayed by 20 minutes, and so on and so forth. But anyway, I'm digressing from the point. The point I was trying to make, we were, of course, talking about the price to earnings ratio. It's the price divided by the EPS. And again, question the data that you see. Don't just take the data as is. Okay, let's move on. EPS, earnings per share. That's just the net profit per share. TTM is trailing 12 months, so that should be based on the last 12 months, or the most recent last 12 months of earnings data. It's telling me that this is the 12 months of data that we have, based on the financials. If I just click on the financials tab, the most recent financials information we have is as of December 2020, right? And that's why you can see that as of now, the trailing 12 months data or information is identical to the information, as of the 31st of December. Once, there's quarterly information brought about, say as of the 31st of March 2021, then the trailing 12 months is going to incorporate that information, right? So that's what the trailing 12 months is. It's the most recent 12 months of available information. Okay, and again, EPS, of course, is just the earnings per share. Earnings date, well, that's when Tesla is going to talk about its earnings, right? So that's the date in which they're going to talk about their quarterly earnings. And I believe this will likely relate to Q1 2021, right? So the earnings from the 1st of Jan 2021 through to the 31st of March 2021. The point is that this earnings date reflects when Tesla is going to announce their most recent quarterly earnings. So they're going to let investors know, how much revenue they made in the most recent quarter, what their earnings were, what their costs were, and a whole host of other information. And by the way, just since we're talking about earnings dates, you can actually log in and listen to these things if you fancy, right? Or you might be able to listen to the actual live calls. You can certainly look at transcripts of the calls. But, that's just additional information about stocks that you can get, right? So all of this information that we're talking about over here is, of course, quantitative information, right? Or fundamentals information in some cases. If you look at earnings calls, then you can get some more sort of qualitative information, right? What the management think about the firm, or what they think about the upcoming quarters, how they think the company is going to do in the future, and blah, blah, blah. So you can get some sort of qualitative information if that's your thing and if you fancy getting that kind of information. Anyway, moving on. Forward, dividend, and yield. So whenever you see forward, that's to do with the future. This is almost like an expectation, right? So what it's going to be in the future based on current information. And so forward dividend and yield is telling you what the dividend is expected to be in the future. So that would be forward dividend. And forward yield would be what the expected dividend yield is at some point in the future. Now, to the best of my knowledge, Tesla doesn't actually pay dividends at the time of recording, which is why you're seeing this NA. But you may well also see this NA because, they don't have the data, or they don't have the information, or they haven't updated the information. But if we take a look at Vodafone, they do in fact pay dividends. So you can see over here, forward dividend and yield. That's almost certainly the dividend expected to be paid, right? And I believe this is actually in pounds, as if things weren't confusing or inconsistent right from the word go. So the stock price is in pence, but I believe this is in pounds, so that's 8p or 8 pence. And assuming this is in fact forward, then I believe that's the dividend that's expected to be paid some point in the future. Okay, dividend yield. Well, dividend yield by itself is just the dividend divided by the current stock price. So let's see if we can actually get to this 6.17. Let's just open our calculator again. So if I take 8 pence and divide that by 1.275, 1.27, let's call that 6. Yeah, so 6.26, roughly about there, right? So 6.16%. That is 6.26%. For those of you who prefer like whole numbers, if I just multiply that by 100, 6.27%. Minor differences over here, because the stock price is actually changing. But yeah, so dividend yield by itself is just the dividend divided by the stock price. Forward dividend yield will be the expected dividend divided by the current stock price. Okay, so that's what that is. And, there's a whole host of reasons as to why the dividend yield is important. So it's important for things like evaluation. If you've heard of something called the dividend discount model or the Gordon growth model, where they can end up using the dividend yield or indeed the forward yield. Again, I don't want to go too technical while also, going at least somewhat technical, so I can actually give you a meaningful overview of what these things mean rather than just waffling and, not giving you information you can actually use. So I'm hoping this is actually insightful for you. Let's move on. Ex-dividend date. That's the date on which the stock price will reflect the dividend payment. Okay, I'm trying not to complicate things over here. Long story short, when a company pays dividends, the stock price actually decreases. And it decreases because when a company pays out dividends, the cash balance of the company actually decreases. When the cash balance of the company decreases, the assets of the company decrease. When the assets of the company decrease, the equity of the company decreases. When the equity of the company decreases, the market capitalization of the company will decrease. That's a tad bit of a simplification, but that's the long story short. That's the story in a nutshell. And so the ex-dividend date is just the date in which the stock price is going to reflect the dividend that the company has paid out. It's not the date on which the company actually pays the dividends. That's going to be the dividend payment date. This is just the date when the stock price is going to reflect the dividend payment. Okay, 1 year target estimate. This is what they think the price of Vodafone will trade at in exactly 1 year's time. And importantly, this is listed in pounds. I know this can seem quite confusing. So the stock price is, of course, listed in pence or displayed in pence. But this 1 year target here is actually displayed in pounds. So that's £2 and 1p, or approximately 201p. Should you believe that? Absolutely not. I mean, no, because, and should you base your investment decision on that? Absolutely not. That's probably one of the dumbest things anyone can do. So please don't, base your investment decision on that. Even though, even if that's based on what analysts think. Analysts get things wrong all the time. Who's to say what analysts say is correct? Please don't pay too much attention to this sort of stuff, right? Because it's a great way to lose money. I mean, use it as a guideline. Use it as an additional piece of information information in your overall, investment analysis or investing analysis. But don't be like, oh, the analysts think it's going to be £2. So, it's currently £1.27, so I can nearly double my money. So this is a great investment. Please don't do that. I mean, seriously, don't do that. Okay, but anyway, that's what the analysts think it may well trade at in a year's time. Whether it'll actually trade at that is something only time will tell. But, the key takeaway for now is don't just take that as is. Use it as, just one additional piece of information that you have available to you as part of your overall arsenal of tools to analyze investments, or, more broadly and more simply to just read stocks. All right, in summary, we learned that while there are, of course, a whole host of different financial websites on the internet, the most popular and most commonly used financial websites include Reuters, Yahoo Finance, Bloomberg, Morningstar, and the FT, or the Financial Times. Now, while each website is, of course, different, and each one has its own pros and cons, and, each one has its own strengths and weaknesses, while they are different in many ways, there are significant overlaps across the board. So, it doesn't really matter which website you look at, you're going to be able to get the stock price data. You're going to be able to see the volume data. Sure, they may differ in, things like the average volume. So one might base it on 30 days, one might base it on 3 months worth of data. But, you're going to have some sort of volume data available, and it's then going to be up to you to read the footnotes and to dig a little deeper and identify how exactly they've measured whatever it is they're displaying. And so all of them are going to give you stock price data, volume data, and, other key ratios like the PE ratio or, the price to sales ratio, which we haven't actually touched on in this particular video. But, there's going to be a whole host of different ratios, which is just going to tell you different things about the company. Okay, so different aspects of the company, say in terms of profitability, or in terms of, whether it's undervalued or overvalued relative to other firms within the same industry, for instance. I suppose the fundamental message really of this video, the most important thing for you is to question whatever you see. Right? So don't just accept the data or information for whatever it is. Don't just take it as is, or don't just accept it as is, because the data could be inaccurate. The data could be wrong. The data could be subjective. And so just because the information has come from, what is an otherwise credible organization or reputable organization does not mean that you should just blindly accept, the data or the information that they give you. Okay, so always question whatever you're seeing, including, of course, question me. I'm not saying I'm excluded from this thing because I'm the one telling you to question things. Not at all. I encourage you to question me. Question what I'm telling you, right? Basically, just question what anyone tells you, because at the end of the day, it could be wrong. Okay, and you're better off asking and questioning things and, identifying, okay, that it is in fact correct, than to not ask and not question things and end up accepting something which is actually false or incorrect as the truth, or, as something that is correct. Okay, hopefully all of this makes sense. I fully appreciate that there's been quite a lot of information in this particular video, but I do hope you found it insightful and you found it useful. We have created a quiz for you, which goes over the many different concepts that we've covered in this particular video to help you sort of stay on track and make sure that you have actually understood the concepts and, of course, that you retain this knowledge. That's enough for me for now, though. Have a go at the quiz, and I'll see you in the next video.